Breedon Group this morning released their half-year results for 2025, and I'm joined by Rob Wood, Chief Executive Officer, and James Brotherton, Chief Financial Officer. Rob, James, good morning to you both.
Morning.
Good morning.
Rob, first 6 months of 2025, how would you characterise them and summarise the performance of the group?
It's been another resilient performance for the Breedon Group. Given Liberation Day, given the challenging markets in GB, given some of the major project delays in Ireland, and also given the adverse weather in the US, I think it's fair to say it's been a difficult first half. But I'm really proud of Team Breedon and the Breedon model that has allowed us to deliver that resilient performance. And I'd like to express mine, James's and the board's thanks to everyone at Breedon for the work they've put in the first half.
And James, turning to you, if we could dig a little bit deeper into the numbers, what lies beneath this resilient performance from your perspective?
So volumes in the first half were down between 2 and 3% across all of our product categories. That's disappointing because the comparatives in half one 2024 were pretty soft. But bear in mind that at the half year last year, cement and ready-mix concrete volumes were down almost double digit. And it's that gives us the confidence that 2024 really did represent the floor in volumes, particularly in the GB market. In that context, to come in with an EBITDA performance down 5% is actually a real credit to the team, given the operational leverage that we have running through the business.
And Rob, back to you. From a strategic perspective, what have been your focus areas in the first 6 months? What have you been working on to drive the strategy of Breedon forwards?
And we've been busy over the last 6 months in respect of our expand objective on our strategic objectives. You know, it's the highlight was probably closing the Linemark transaction, doubling the size of our US business, and really vertically integrating it and increasing our exposure to infrastructure in the US. And in terms of improvement, it's all been about replenishing our minerals and about commercial and operational excellence. In respect of our people, sustainability and finance lenses that we view everything through, really pleased with the progress we've made. With people, we've restructured the organisation in the first half, moving from a divisional model to a country-based model, which allows us to get closer to our customers and other stakeholders. In respect of our sustainability, we at last have signed the shareholders agreement for the Peak Cluster, and this is a carbon capture and storage project we've been speaking to investors about over the last few sets of results. We've secured a significant equity investment from the National Wealth Fund, and the project is now moving through to FEED, which has the potential, as we've said before, to capture 40% of the UK cement industry's emissions going forward. In respect to finance, we've raised additional debt to fund the Linemark acquisition, and we've also extended our RCF facilities out until 2029. So all in all, we've made some really good progress.
And James, it sounds like it's also been very busy on the financing side with new facilities being signed up. So could you talk us through where the balance sheet is at the moment in terms of the optionality you have to fund future growth for Breedon?
So our leverage at the half year is 2.2 times, which is a little bit above our target range of 1 to 2 times. But bear in mind that this is the very top of our working capital cycle. And as the rest of the year progresses, I would expect that leverage to come back down to below 2 times by the 31st of December. So that does give us optionality in terms of our ability to finance potentially further acquisitions and certainly continuing with our proactive investment back into the business. We've also increased the dividend up by 6%, and that's really an indication of how we regard the business's long-term prospects.
Rob, coming back to you and looking forward into the second half of the year and perhaps beyond, what would you say about the outlook for Breedon Group at this point?
I think given the difficult first half and given the current sort of macroeconomic headwinds we all face, I think the outlook and the performance this year is likely to be at the low end of market expectations. But I think it's worth remembering three things, and I ask investors to remember three things. One is that the long-term growth drivers for infrastructure and housing, which are our main end markets, are strong, both across all three of our platforms. Secondly, the Breedon model and the Breedon team have yet again demonstrated our resilience. And last but not least is that Breedon is now in a good place where, well invested and ready for when the markets inflect, and when the volume and construction activity does improve, we stand to benefit.
Very good. Well, Rob, James, thank you both very much for your time today.
Thank you.
Thank you.